Hello and welcome back. We're back for another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson. I'm the Australian Livestock and Commodities Manager for StoneX, based here in Sydney, where we're developing price risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian cattle swap. We're brought to you by StoneX Group, a NASDAQ-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives, futures, options or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. Before we get into today's episode, thoughts go out to those in Western and Far Western Queensland this week that are dealing with flooding. We're thinking of them, wishing them, their families and their livestock all the best and hope everyone's safe. Jumping right into it, three things I'll kick off with this week that I think have been probably a theme of the past fortnight, but we're looking locally here at the minute, but definitely the rains in Queensland are the big story. It's been interesting, the conversations I've had with the market this week around the rain and its timeliness. There was a number of conversations I've had that have indicated, producers and their strategic thinking making about sales following some dry weather and a lack of a wet season for a lot of the northern and northwestern areas of Queensland into the territory. They were considering a destock. And just starting to lighten off some numbers because of the lack of feed. It's not necessarily liquidation, but they were getting short on feed and believed they'd have to make some decisions because of that lack of rainfall. We're here a week later, and I would think those same people I've been having these conversations with are now thinking about where they can find some more stock. This rain has been exceptional. You could even say in some senses for a lot of places it's quite historic. The second thing, big story this week after some disruptions in southeast Queensland because of Alfred, we saw slaughter numbers based on the NLRS hit 149,000, and I'll get into the detail, but figures are now moving back towards the 2014-15 volumes, which is really impressive. The third thing, we see it generally, and we certainly saw it in 2022 or 21-22 when we were in the thick of the rebuild. I believe, it wouldn't surprise me that we do see a bit of a short spike in these markets for the next fortnight, maybe 3 weeks, just while things need to settle down, some country needs to dry out. And for those areas that haven't been adversely affected by the rain, I think you will see a little bit of confidence and we could see the market pick up. We've seen it this week generally across the board already, but my belief is that once the country dries out and things return to a little bit of normality, the fundamentals of supply and demand remain, and that's where I see some price pressure coming. As I mentioned, the rain itself has been excellent, and obviously barring the areas that are going to deal with infrastructure being washed away, some potential stock losses, things like that. Generally, this rain has been nothing short of exceptional for basically the whole state of Queensland, large tracts of the territory, the Kimberley, and right down into parts in New South Wales. Starting in the south, or starting in the north, I should say, this weather system is really going to set up the north for another really solid year. Those areas that have received the good rain, it's really going to aid them in a good start to their dry season, and I'm pretty confident that this rain is going to help fertility rates in the breeding herds up there, which is where the majority of the cows are. And also lower some mortality rates and lift some growth rates. So the result of that is it's reinforced my belief of herd growth in the northern herd in 2025, and I think we'll see that offset the southern herd's decline. So in the StoneX cattle market outlook, I'm expecting in 2025, or the forecast is for the herd to reach 41.5 million by November of this year, and these rains have reinforced my belief around that, particularly underpinned by the good season supporting improved fertility rates. The flow-on effect from that, both going out of the live or out of the northern markets into the live export space, and then obviously slaughter cattle heading southeast into into the downs and processing facilities, we're going to see a lot of heavy cattle come forward, whether that's out of the Channel Country or the northwest of Queensland, NT, etc. These rains have really set up the areas to produce a lot of cattle, or I should say a lot of beef from these cattle with the good seasonal conditions and the flow-on effects of what this rain will do for such a vast tract of the country. And it is where all the cattle are, which is why this rain is so impactful and really important. It's literally fell right across the majority of all the cattle regions in the country. And WA is now the next one in line for some rain over the next week to 10 days, particularly in its northern areas, into the Pilbara, Kimberley, Gascoyne, etc., which in parts has been a little drier. So if that were to deliver, we're looking at a really well set up 2025 for Australia's, key beef producing regions. I said I was going to start with the south when talking about the rain, but I will get into the south now. And I spoke about it a few weeks ago. This rain is really going to assist these northern New South Wales producers right through to, large parts of southern Queensland with their oats crop planting. Whether they've already planted or whether they're going to plant as a result of this rain, either way, it doesn't matter. It's really set these regions up now that this oats crop can be put in the ground or it can get up and get going. And that's really important for these regions. They rely on the ability to plant an oats crop to fill the winter feed gap, which is a regular situation. It's seasonal. They do it every year. And if we had this conversation a week or 10 days ago, there was a lot of producers and people I've spoken to in those areas I mentioned, which were pretty worried. There was limited soil moisture. We knew there was moisture down lower, but that topsoil was dry and some went dry sowing. But now with this rain, it's a completely different picture. The oats will be in the ground. They'll get up. We're going to see plenty of good heavy cattle, both grass-feds and feeders, come out of these regions in the second half of this year. And there's going to be some good numbers of those cattle. And I think that this rain has really been season defining. And I did mention that a couple of weeks ago in the last episode about how important this event would be. And it's delivered so far, generally. The last of those three key things I wanted to raise this week specific, which I thought highlights, is these weekly kill numbers. So we did see, obviously, in the first fortnight of March, some serious disruptions, particularly for southeast Queensland, due to that ex-tropical cyclone Alfred closing the port, closing plants, lost kill days, etc., etc. We moved past that, and last week kill numbers jumped based on NLRS data. So for the week ending 21st of March, kill numbers jumped 19,000 head, and they reached their highest level since the last weeks of December 2019, when we were basically right at the end of that major drought. When we calculate the difference, and I've spoken about this before, when we calculate the difference between the ABS mandatorily reported numbers and MLA's NLRS data, there's a difference of about 26.4%. So that's based on the Q4 24 volumes. When you add that 26.4% to the 149,000 we processed last week, it puts the national kill at 188,000 head of cattle. So there's obviously that gap of 26.5% because some processors choose not to report those numbers to MLA. The vast majority do, but there are some that don't. So we need to account for that when we're trying to calculate actual numbers. And that difference of sort of 39,000 head of cattle with ABS actuals and NLRS, putting those numbers close to 190,000 head on my estimates means we're actually a touch in front of the weekly kill volumes we were recording in December 2019 at the base, really at the bottom of the drought. And we're only, based on my estimates, sort of 12 to 16,000 head behind the March 2015 weekly volumes. That is telling. And I think that's really an interesting little piece of data which shows you how significant the growth in throughput has been. We are moving back towards those 10-year highs. We've seen that in basically all the other major figures. But when we see such a sharp jump in processing throughput nearly to 150,000 on the NLRS numbers and extrapolate that out to what an actual volume will look like, we're nearly back at that 2015 level. And it just shows you that the processors are handling the numbers. And I think what's really important is add on top the fact that carcass weights are substantially heavier than the 2019 weeks where we were killing about the same numbers in December, and obviously heavier again than the numbers we were killing in March 2015, a decade ago. So the processors are managing with these volumes, and we are well on the way back towards these cyclical highs in slaughter throughput, which reinforces to me that 9 million head out of the 9 million head slaughter from the StoneX 2025 cattle market outlook is very much achievable. Into some of the details on supply, demand, and price this week. I've been looking at the numbers, particularly out of the sale yards, around how Q1 25 is looking relative to Q1 last year, and they're eerily similar in terms of the volatility in supply and the ups and downs and jumping around of numbers. It's very, the numbers look, albeit they are a bit higher, so there's obviously more cattle coming forward, which is expected. But when you look at how significant the volatility and swings are in supply, and supply only, when I say that, it's very much like last year and it's jumped around a lot. I think we know that the paddock cattle are flowing. They're obviously moving fairly well, and that was a big reason as to why Queensland got backed up quite quickly with volumes in March because of those numbers coming forward with a dry start to the year. But on the sale yard front, it has been all over the place. I still believe the Queensland, particularly out of the yards, the Queensland numbers are underdone. And what I mean by that is I think we're yet to see any serious ramp up in supply out of Queensland. And we know that the cattle are there. It's just because of the disruption late last year with some good rains, Christmas moving into 25, cattle were held back, got rains in March, rains now. There's just been a lot of things that have sort of just keep kicking the can down the road. And those numbers are going to come, but I think we're yet to see it. And once the country dries out here in Queensland and we get through the hiccup of the next sort of 4 to 5 weeks due to a short working month and Labor Day in Queensland for the first week of May, these numbers will flow. Victoria and New South Wales, on the other hand, their quarterly volumes, and we haven't yet finished the March quarter, are all ahead of last year, the 3, 5 and 10-year averages. And I think Victoria particularly is very telling. It's showing how much of an impact the dry conditions in the state are having on cattle supplies. Vic itself, sale yardings or throughput are nearly 90,000 head, or 55% higher than Q1 last year. And compared to the same quarter on the 10-year average, they're higher by 44% or 73,000 head, which just shows you the volumes of cattle going through those markets at the minute out of the yards because of the seasonal difficulties and challenges they're having. Moving down the supply chain, I've mentioned Alfred a couple of times, but I looked at the export numbers today. We are on track to hit 110,000 tonnes or more for the March quarter, the March month for beef exports. I think that's an exceptional achievement considering the Brisbane port, which is where the majority of our beef is exported from, was closed for nearly a week in early March. It just shows how quickly the guys have recovered and the supply chain's looking to recover to move those volumes. And that's really important to keep the supply chain going. And it just shows the resilience of that part of the sector to manage challenges like that and get back on its feet and move those volumes really quickly. So it's moving a lot of product, and realistically, you could say you've had 25% of the month cut out because of the rains that shut the port down. Looking at demand this week across the market and where I'm seeing things, I was discussing with a journalist, and they asked me what I thought of demand so far in 25, and my comment to that was lackluster. You look at the weaner sales in the first fortnight of trading in January, they were solid, they were strong. We're yet to see the Northern New South Wales weaner sales, play out, and obviously this rain will be beneficial. But my point was that that lackluster demand, other than those that basically the first fortnight in Jan, we've only seen markets go one way, and that's softer across the board. Doesn't matter whether it's finished cattle or cattle to go back to the paddock. I do believe it's weighted numbers and supply and demand. They're the fundamental drivers of the cattle market. But we're still not seeing this producer confidence translate into bidding up restocker prices, which in turn will drive that further pressure on price from a feedlot and processor end. And what I think the reason I mention that confidence aspect again is the market is in a fundamentally different cycle to what it was 2 to 3 years ago during the rebuild. And I've got more on that later in relation specifically to this week and what the numbers tell you is pretty clear evidence of where we're at in the cycle. Processors and feedlots, particularly feedlots at the minute, they're chock-a-block full. There's good margins in feeding cattle, particularly 100-day and shorter fed cattle. There's a reason why those feedlots are full, because they're making money. And I think that, and I mentioned it at the start, because those feedlots are full, it's not forcing them to really bid the market up, even in periods now where you are going to see, a week or two, maybe 3 weeks of reduced supply because of this rain. And I think once we get through that period and the country dries out, feedlots are still going to be full. And they did book well forwards prior to this rain. They're relieved it's came, but because they're full, it's not going to force demand higher, which is why, for me, fundamentally, I still see downward pressure on the market once this rain passes and the country dries out and cattle start moving again. It will come back to supply and demand, and the balance of that pushes me to believe prices will come under pressure, once this system and the weather settles. In terms of price, that was a pretty good segue into that comment about price, and that's where I see things. And I mentioned it earlier as well with delivery of numbers. It's pretty much just kick the can down the road as to when we can expect to see cattle turn up. I mentioned that about Queensland a moment ago with their sale yard numbers quite or well down on last year, or firm on last year, and the cattle have still got to come. It's not a wheat crop that can sit in a silo. When the cattle have got to go and they're ready to go, they will start to move. And we that's why this rain was so important, because we saw those numbers starting to flow out of Queensland. There was pastoral companies starting to move some big numbers, and the rain turned up and has put movements of cattle on the back burner for some time. I don't see any sort of sustained period of, continual rising prices in the Queensland market, particularly for restocker and feeders. And I mentioned the reason why with feeder cattle due to full feedlots and availability of supply. In the restocker space, the early weaners in Queensland and northern New South Wales particularly should be in for some supportive markets, due to that demand and the rain. People will want to be getting stock on these paddocks as soon as able. And I think those early sales, those northern sales across Carcoar, Tamworth, etc., are going to be favourable, and that should push some positivity out of those cattle in those markets. But once you get into the core sort of weaner selling season in Queensland, and for the feeders as well, as those northern musters ramp up, I think you'll see a bit of pressure. Down south though, south of Dubbo into Victoria, across the southeast South Australia, where dry conditions persist despite some sort of respite with a little bit of rain recently, I think quality are the cattle that you're presenting, and how well bred they are, and the weight in the cattle are going to be the hallmarks of this year for this market. At the minute, it's looking unlikely to see an autumn break until late May. Into June with a wet period looks to be the opportunity for some some upside in that Victorian market. But regardless of that rain, I still think weight is going to be fundamentally the key factor. Buyers are going to be interested in weight, and that's what they're going to be chasing. And obviously, how well bred and how well presented the cattle are is going to be really important. And I think particularly on your heifers, they're going to get discounted for anything that's in secondary condition, or not well bred. And that goes for all stock categories, but I think heifers particularly are going to come under a bit of pressure first, and those secondary quality ones particularly. And you always see the heifer market soften before the steers and everything else. I mentioned a minute ago about this market and confidence and how this situation this week has been so telling. You look at the BOM's rainfall maps for the past week, and it basically fills 3/4 of the eastern seaboard, barring southern Australia. And when you actually look, particularly at the sale yard markets, you look at where where prices moved. It was actually the feeders and the finished cattle that picked up stronger than the restocker market. And I think that's very telling. If we were sitting here 2 to 3 years ago, I should say 3 years ago now, during the rebuild in 22, if we had this sort of rain, it'd be the restockers pushing the market, 20, 30 cent jumps in a week. But we're at this point in the cattle cycle whereby numbers have grown substantially, and we've moved past it being a seller's market. It's now a buyer's market. And if you've got feeder and finished cattle jumping ahead or increasing in price, rallying in price more so than the restockers when we've had such good widespread rain, it shows you that the restocker appetite to jump into the market is clearly less than the demand from the buyers to secure stock, which I think is quite telling. It's been an interesting fortnight. There's been plenty happening. Looking forwards to our next episode where we're going to have a guest on, chat markets, and look forwards to recording that episode and sharing it with you all. As always, if you do have a question, send me an email to ripley.atkinson@stonex.com or record a voice note of yourself, where you're from, and we'll get to answering it in the next episode. Thanks as always for listening. Take care, and we'll see you next time.